Hello, everyone, and welcome to the FlowRY Show, a journey through life's tapestry, wisdom for every generation. I'm your host, Nicole Flowers, and today we're going to explore the various cross-generational perspectives in finance. With us, we have a very special guest who is going to dig in with us on what does it mean cross-generational perspective on finance and bridging that gap. Her name is Paola Origel, who is a notable figure in finance and cryptocurrency sectors. She is the co-founder and CEO of Hyla Fund Management, previously known as Chainlink Capital Management. She has more than 2 decades of experience in finance, where she has advised clients on blockchain, cryptocurrency investment opportunities, including buying and holding liquid assets, generating yields, and venture capital investments. She has worked in various roles, including international private banking at HSBC and investor relations at multiple family offices in New York City. Paola, welcome. And we're so glad to have you today on the show as we dive into today's rapidly evolving financial landscape. Understanding cross generational perspective, I'm sure you'll agree with us, is a crucial for success. But let's just dig right in, Paola. You have seen and traveled the world for many decades now, spanning generations and advising clients on the various global finance trends. Through your perspectives, what are some of the generational trends that you're seeing in global finance? How are baby boomers looking at finance versus Generation X, the millennials, Generation Z? Share your perspectives and observations with our audience.
Of course, Nicole. And first of all, thank you so much for having me. I'm very excited to having this conversation. And thank you for your time and the wonderful introduction that you just have made about my background and my experience. That's a very interesting topic, and I'm very passionate about it, by the way. I think that when we look at global financial trends, you can really see a generational shift happening. Baby boomers who are now in their 60s and 70s, and Gen X who are between 44 and 59, have traditionally been the dominant forces in the financial world. But the focus has always been on more stable long-term investments like real estate, blue chip stocks, and bonds. But millennials, aged 28 to 43, and Gen Z, or True Gen, as some people are calling them now, who are between 12 and 27 years old, are coming in and disrupting that whole dynamic. These younger generations are much more open to taking risk and embracing innovation, especially in emerging markets. This shift is only going to be more relevant by 2030 because Gen Z are expected to become the largest age group globally. Nicole, in Brazil alone, this younger generation already makes up about 20% of the population. And Brazil is the largest country in South America with around, I believe, 215 million people, which it represents a major market. And this demographic shift is already in play. There is no coincidence that in Latin America, Brazil is the most innovative country of the region. So reflecting in this shift, I observe the evolving values of younger generations, right? Like, for example, I have a Gen Z at home that I just dropped off at university in Shanghai. And what I realized by raising him and the values that he has now, this generation prioritizes community, collaboration, and health over traditional notions of wealth and individualism. I mentioned, before we started the podcast, that I've been in the last 5 weeks in different 6 countries around Asia. And this weekend, I attended the Network State Conference in Singapore. And I noted that most of the attendees are primarily in their 20s and early 30s. And
Mm.
most of the projects that they discuss are focused on building inclusive communities and addressing the social traumas caused by previous generations, particularly the baby boomers. So now, in terms of investment opportunities, emerging markets, um, like in regions like Latin America, Southeast Asia, and Africa, are attracting attention to the Gen Z generation due to their immense growth potential, particularly in tech-driven sectors such as fintech, e-commerce, and renewable energy. These this generation, Gen Z, and also millennials, see these markets not just as a good, attractive investment opportunity, but as avenues for meaningful innovation, but the most important, social impact. So I'll give you an example that I'm excited about, and we're all very familiar with it. In Africa, the mobile money revolution has been taking off by platforms like M-Pesa.
Mm.
M-Pesa was launched in Kenya in 2007. That's very early. We're talking about Bitcoin, starting in 2009. This innovation started even before then. Um, this platform has been very impactful because users can send and receive money, pay bills, and make purchases through their mobile phones without needing a bank account. And in Latin America, we are mirroring some of these solutions. The rapid adoption of digital banking and cryptocurrencies resonates very well in these younger generations, but also in these markets. They're much more comfortable with decentralized systems, not only finance, but peer-to-peer exchanges. On the other hand, as I said before, baby boomers and Gen X tend to approach emerging markets with caution. They're focused more on traditional investments like infrastructure projects, sovereign debt, and natural resources. While they are starting to explore some of the digital assets, they're still taking it with cautious, and they're much more resilient to this shift in the financial landscape. I
Thank
hope
you.
that answers.
Absolutely. That was very insightful as you walk our audience through the various investment strategies for emerging markets and the generational approaches. And you're spot on. When we look at older generations like baby boomers, they tend to be a bit more conservative. They emphasize through thorough due diligence and risk mitigation strategies versus other generations who tend to look more of a blended approach. You just mentioned about dropping your son off at college and the conference you attended with 20 and 30-year-olds, and we know that the younger generations, they're more focused on to incorporate sustainable and impact investing principles in their portfolio, and that's very important for them. At the same token, yes, they do embrace high risk, but to your point, sustainability and social impact is a key theme that they are focused on. And I just want to thank you for sharing and giving very concrete examples with our audience and how we're seeing finance being treated and being viewed by the different generations. You're a woman in finance, and I'm sure you have seen across the decades the various barriers that needs to be broken, and barriers that you yourself have broken. What would you share with us? And I do consider you to be one of the trailblazers, a pioneering woman in your own rights, where you have broken into a male-dominated finance field and have faced significant challenges and barriers. And just share with us, with our audience, some of the things that you're doing to pave that pathway for more women to enter finance and breaking the barriers across generations. To share with us, and also some of the innovations that you have done and continue to build in this sector.
Yes, Nicole, and thank you so much for acknowledging just some of the efforts throughout my career. Indeed, sometimes have been challenging, but also exciting at the same time. And I'm also very excited to be more inclusive of women and support them in any way I can. now that I'm in this position. Um, I think that we can all agree that women have been underrepresented in top financial management positions for a very long time. For example, I was reading a Deloitte report that showed that only 6 of the 107 largest financial institutions in the US were run by female CEOs in 2019. And even by 2023, women still only made up 8.2% of the S&P 500 company CEOs. It's not just getting into the field either. I mean, men and women might start out in finance in nearly equal numbers, and also technology, not only finance, but men tend to climb the ladder faster. For example, in 2022, only around 15% of venture capital check writers were women. And I see that very often. Most of our LPs are men. And even though I encourage women to participate in the space, they're a little bit more risk averse than men. Companies founded by women also, it's another topic. They only receive 2% of all venture capital investment. And in private equity, women held just 21% of managing director level roles by the end of 2022. Although there has been some progress and there's a stronger push for diversity now, we still have a long way to go. Women currently hold around 48% of entry-level positions in private equity. And in 2023, for the first time, about 10% of Fortune 500 companies had female CEOs. It's still very small compared to the male participation. Despite these numbers, we're seeing some men, especially men leaders, being very supportive of women. I was just reading an interview with Mario Valle Reyes, who is the founder and CEO of Alter Ventures, a very prominent gaming venture studio, where he mentioned that he believes that women are better investors.
Wow.
What is more exciting to me is also how more women are turning to entrepreneurship to forge their own paths, especially in emerging markets and digital assets. And this is the space where I am in. A great example, and I would like to honor and mention some of these wonderful women because I think it's important. A great example is Annabelle Wang. She started on Wall Street, and then she made the shift into blockchain, and she has become the head of Amber Group, which manages billions in digital assets. Also, Cristina Junqueira from Brazil, she co-founded Nubank, providing digital financial services to over 53 million people in Latin America. So as I said before, these women aren't just participating in the industry, they're reshaping it. They're inspiring future generations through leadership and entrepreneurship. And I think it's important, Nicole, to mention that if women really want to see a shift in participation in female leadership roles, women need to support one another. It's important that we set up an example in front of men so men can support us as well. So we need to do this together. Now, when we talk about the challenges women face, it's not just about getting their foot in the door. They are systemic barriers, like limited access to education, resources, and opportunities. Add to that gender discrimination, a lack of mentorship, and cultural biases. And it's easy to see why the path to success for women is more difficult. I also believe in what I've observed in my personal path is the lack of female role models. Without women who have already walked the path, it's very hard to navigate those challenges. It's very challenging to build a career in a man-dominated industry where you don't have a female mentor or a role model, because it's very difficult to relate to a man. At the end of the day, we are a different gender. Many women also worry about their work-life balance, and they feel that they don't get enough support from their managers or leadership, which also leads to hesitation about pursuing careers in finance. And I have heard many comments of wonderful young women that they want to get in the space, and they reach out to me and they want to talk to me about my path and how I have done it. But they tell me it seems that it's too difficult. And when they say, and I want to make sure that our audience listen to this, because I have heard both sides of the story, men and women. Women tend to see how difficult and how much they struggle just to get some positions in the industry. And men who receives, or they are in the other side of this message, they they translate this as a lack of willingness of women to put the work or the effort to get into these leadership roles. But I tend to disagree, because I have go through the path and I know how much more difficult it is for women, just for some of the things that I already mentioned. So I think it's important that we support women in their path, especially when they're at a young age and they're excited and they are willing to do the work and put the hours to get there. Um, and the gender gap in finance doesn't stop at the leadership roles. It really extends, as I said, to financial access. Um, it is important to recognize that globally, women are more likely to be underbanked or unbanked, and that's often due to our cultural norms, lack of financial education, or less of formal sector employment. And this leads to women to rely on inefficient financial methods, which can keep them economically vulnerable. So if we look at all these factors, we can see why it's a perfect storm and why we have this disparity in participation of women in this industry. But I believe, blockchain and emerging technologies like AI as well can be our opportunity to bridge that gap. And we have seen over and over again that when women gain access to financial services, it creates a ripple effect. Women tend to contribute more to economic growth, and their autonomy straightens. We need to remember that women are the people, or the person and the family, who set up the example for their children. So it's important to take care of them. For women, owning digital assets could mean greater financial independence, inclusion, and agency. And I think this will promote both gender equality and economic empowerment. As I said at the beginning, the industry still has a long way to go in overcoming male dominance, um, especially considering how tech and finance have historically been led by men. For me, I think the key question is, how can we ensure that in this new digital asset space, we don't repeat the gender inequalities we have seen in traditional finance and tech? And I have some suggestions that me personally I'm trying to apply in my organization and in the way I do business. I think that if we want to support women, the first thing that we need to do as investors is to believe in and invest in women. That's the number one thing that I will recommend everyone to do if you want to support women who are trying to work in finance or are entrepreneurs. I think it's important that we develop and support safe spaces. And by this I mean in these very male-dominated industries, sometimes it's very difficult when you are one of the 5 women in the room. And it goes from even just having the services for women that sometimes are not even there. I think also as a for companies, having diversity and inclusion initiatives, it is important. We need to recognize that men and women were different, but not one is not better than the other. I think each of us have a different set of skills and superpowers. I call them superpowers, that we can bring to the table, and together we can build better organizations. I think addressing bias and stereotypes is important as well, and not be on denial. I understand a lot of people don't like to talk about difference in gender, and I've been told many times, I don't think you should bring that up. I don't think you should talk about gender. I don't think anyone should point out if you're a woman or a man. But I think if we want to make a change, um, we need to address these biases. I understand that there will be a time where we don't have to address um, the gender difference, and I think that will be optimal, but we're not there yet. I think bringing education and awareness of these differences is also important. Um, Also, I think that partnerships and collaborations with women are also very relevant. Community building and obviously networking opportunities. Events that can be more catered to women. I've been to some wonderful events, and again, I feel very blessed. Throughout my career, I have had terrific male mentors, and without them I wouldn't be where I am today, and I have the best partners that I could ever wish for. However, in some instances and events and conferences and network events, even the activities are extremely male. um,
Mm.
i I attended a camp that is only for financial institutions, um, very well known event where for 3 days we share experiences and amazing panels and conversations. And the activities that we had, to pick from, it was throwing axes, self-defense, shooting firearms,
Oh my,
and there- and no, it was super fun. I have to say, I learned a lot. I have a lot of fun, but I felt that there was a little bit like misrepresentation of the female gender. To
yeah.
be fair, I think that there were around 300 men and we were only 5 women. Um, but yet I think that we need to start thinking more about the other side and putting ourselves in the shoes of the female representation, and the most important, for the wonderful men that are out there, because they are wonderful and they're very supportive. Don't be afraid to ask women what they need and what they want, instead of trying to decide it on your own.
And Paola, thank you for driving change through leadership positions and entrepreneurship. Thank you for leveraging technology to create inclusive financial products. And I can't emphasize this enough. I want to thank you for championing diversity and intersectionality in finance. You have truly, and you continue, along with other trailblazers, focus on redefining success and challenging the traditional industry norms. To your point, yes, we need to increase representation in middle and senior management, advocate for policy changes and mentorship programs. And you hit it right on the nail. Emphasize on networking and creating that supportive communities for women. Yes, this field has been a male dominated field, but there is hope and there's advocacy for us to establish those foundations for future generations as we continue to break down the barriers. And you started to hit on this a bit around the use of AI and other technologies as we continue to build more refined financial products. Just double click a bit more for us when we look at fintech and the innovations in this area. What are some of those generational adoptions and impact that you're seeing? Things spanning from mobile banking to advisors, now AI in finance, and to the point around blockchain and cryptocurrency. Share with us some of the fintech innovations that you are currently working on and that you're also seeing in the industry.
Yeah, as I mentioned before, Nicole, I think that there's definitely a very different approach when it comes down to technology and how these different generations apply these new applications. As I mentioned before, baby boomers, they always trusted traditional financial institutions. They're used to going to the bank in person, having close relationship with their financial advisor, writing paper checks, and they even care, and it matters to them how their financial advisors look and dress. Very conservative environment. Some boomers are starting to use mobile banking apps, but many of them, I believe, they're still skeptical about fully diving into digital finance and trusting that these platforms are secure, especially when it comes down to automated investing and, as you mentioned, robo advisors. They still prefer the stability and personal touch of human advisors over automation, which makes sense given what they have rely on these because they have been relying on these relationships for so long, and also because um, of the market conditions they live and events that happen in the world throughout their generation. We also need to take that into consideration. As I mentioned before, Gen X is a little bit different. They have seen the rise of digital tools, but still remember life before that. So they take a more balanced approach. Many in this group use both traditional and modern services. They might use robo advisors again, for things like automatic investing, but still want to talk to a human for bigger and more complex financial decisions. And Gen Xers appreciate much more the convenience of mobile banking, but they don't fully trust automation when it comes to managing their long-term wealth goals. Then you got millennials who were really the first generation to fully embrace fintech. A lot of that comes from the fact they lived through the 2008 financial crisis. And this has been a breaking point in the industry, not only in terms of regulation, but also innovation, which left them, this generation, the millennials, left them with less trust in traditional financial institutions. And I believe I'm part of this generation, and I share this sentiment. And I think that's probably why we tend to gravitate towards more like mobile banking, peer-to-peer lending, and digital investment platforms. Like, I think one of the biggest shifts that we see, or one of the biggest platforms that comes to mind, is Robinhood, because we're looking more for transparency, control over our own finances and decisions, and easy and fast access. And we prefer automated investing solutions that are data driven, and rather than relying on a human component. We also tend to focus more on ESG and environmental, social, and governance factors. We tend to align more our investment decisions with our values, which I think the baby boomers, Gen X generations, didn't tend to do much. And now finally with Gen Z, as I said before, this generation, including my son, they are digital natives, and they grew up in a world where everything is online, including finance. They're all about mobile banking. They believe in the power of decentralization, decentralized finance, and cryptocurrencies. For them, platforms like Venmo, PayPal, and all the crypto wallets that we use now are much more familiar than actually walking into a bank. When I talk to my son, about like paper checks, he can't believe we're still using that. Um, and
My
and
mother loves to go to the bank physically with her paper check, so there's still value there.
exactly, they also don't understand why it takes up to 72 hours to send a wire transfer when with your crypto wallet it takes like less than 10 minutes. So with that say, I mean, they're also pretty entrepreneurial, right? And as I said, now that I've been in Shanghai, I've been in Korea Blockchain Week, I went to Japan and then Singapore for Token 2049 and the NS conference. And what I also observe, as I mentioned at the beginning of our conversation, um, they are also very entrepreneurial, and they're not shy away from high risk investments. That's why we see, all these trends of like trading meme stocks and cryptocurrencies, which I think it speaks volumes to their comfort to very volatile asset classes. So I think each generation has its own way of approaching mobile banking and fintech, and but I think the tendency um, is to go to decentralized systems and giving more financial access to the world. So I think what is clear is that the future of banking is digital, and as this shift continues, we'll see even more innovation in how people manage and spend their money. One of the biggest trends, that I keep hearing during these conferences is building decentralized systems and platforms that can bring us together, building communities that are decentralized, not only in the infrastructure, but physically. We see the tendency of nomadic lifestyles getting more popular and bigger among these entrepreneurial communities, which is very exciting and is reshaping the way we perceive ownership. More and more, we're seeing with digital assets the fractionalization of current ownership, not only monetary access, but also tokenization of real world assets like your home, um, even your clothing. As I said, and I keep mentioning my son, but he's a perfect example. He doesn't believe in owning too much. He believes in sharing and believing that there is enough for everyone. And a way to share nowadays is fractionalizing through tokenization of these real world assets. So you can own a percentage of a house that your friend owns based on your own possibilities, which I think is very attractive. And but it requires also a rewiring of our brains
Yeah.
and how we perceive wealth.
No, absolutely, Paola. You have enabled our audience to just explore how different age groups approach key aspects of finance, from global trends to investment strategies and technological innovations. And I want to thank you for that. And thanks for allowing us to examine the diverse viewpoints where we've gained valuable insights into the future of finance and to develop more inclusive, forward thinking strategies that truly will help us bridge generational gaps and drive progress in the industry. Paola, thank you so much for joining us on today's show, where we share stories, creates a bridge between generations, allowing us to connect on a much deeper level. We're able to learn from each other's experiences and foster understanding. Thanks for embracing the power of storytelling, sharing your story, your experiences with our audience so that we can build meaningful relationships and create a more connected world. And I like that perspective that your son have. There is plenty for everyone to share. So thank you for helping us navigate the tapestry of life on today's segment. Until then, I am your co-host, Nicole Flowers, and we had our guest Paola, who talked about the various trends across finance and innovation. We will be speaking with you next time. Thanks again.
Thank you.